The Federal Reserve's hints that rate hikes are over and that rate cuts will be considered have made people very happy. As a result, interest rate futures markets are pricing in 150 basis points of cuts next year. Traders think there is an 83% chance that rates will go down in March and a 12% chance that they will go down by 50 basis points. This is a drop of more than 110 basis points in the 10-year Treasury yield. It was just above 5 in late October and is now at 3.9. The bet is that the Fed will have to cut rates quickly to keep real rates from going up because inflation is going down. 2/3 of the 251 fund managers surveyed by Bank of America in December think the U.S. economy will have a soft landing. Investors are also more optimistic about bonds than they have been since March 2009. Over the past few days, macro investor and Bitcoin maxi Lyn Alden has posted a few tweets on X, the social network that used to be called Twitter. In them, she talks about U.S. inflation, monetary policies, fiscal power, and USN treasuries. We will look at Lyn Alden's posts and see how they relate to the current state of the economy in this Alpha Pact video. Before we start, don't forget to subscribe, hit the like button, and enter your thoughts below. There was a turning point 7 weeks ago when the Treasury said it would pay for its debt with a lot of extra T-bills. Lyn Alden tweeted about this 2 days ago. There are now $33.89 trillion worth of Treasury assets out there, and that number will soon reach $34 trillion. All of these stocks need to be sold, and holders from other countries play a big but going away part. Over the past 2 years, foreign investors have kept their overall stocks of U.S. Treasury securities pretty stable. Their holdings dropped to $7.56 trillion in October, up about 6 from a year ago. But the same as in June 2021, according to SIC data released by the Treasury Department on Tuesday afternoon. The top 6 financial centers, London, Belgium, Luxembourg, Switzerland, the Cayman Islands, and Ireland, saw their holdings drop to $2.22 trillion. Less than the high point in August. Japan is the biggest creditor to the U.S. Its holdings grew to $1.10 trillion in October, as shown by the green line on the chart. However, that's less than the $1.03 trillion level seen in 2021. The purple line shows that China and Hong Kong cut their shares even more, to $969 billion. For years, China and Hong Kong have been getting rid of their treasuries. Their total amount of treasuries fell to $969 in October. It is 8.9 lower than it was a year ago, which is the lowest level of records going back to 2011. As people tried to get their money out of China in 2016, China sold treasury assets to keep the RMB strong. After that, it added to its shares again. The shares have dropped by 29 since COVID, though. In a different tweet, she talked about how the time when Americans couldn't own gold was similar to the time when treasuries were a bad investment when looking at inflation. It was also pointed out that more people in the world have cell phones and bank accounts, which shows how little trust people have in the government-run banking system. Referring to the Kelvin Home Alone grocery bill, Lyn Alden also said that the CPI figures did not show true inflation. Since 1990, Kevin's Home Alone grocery bill has gone up by $177. It had both food and things to clean the house. The official CPI for food has gone up by 151 since then, and the official CPI for cleaning goods has gone up by 88. So for this group, the CPI clearly underestimated inflation. Dropped sharply from a high point of 9.1 November of last year to just 3.1. Of course, the Federal Reserve is very happy about this, even though they still want prices to drop even more. After a hint on Wednesday that it might start lowering interest rates next year, the stock market went up a lot. But Fed officials know that many Americans aren't ready to party just yet. Fed Governor Lisa Cook said last month at Duke University that most Americans are not just looking for low inflation. They want prices to go down. They want the prices to go back to how they were before the pandemic. Cook said that she gets that feeling because her own family has similar issues. Deflation is not what the Fed wants, though. They want prices to go up as long as they do it slowly enough that people don't have to worry about it. Lyn Alden brought up something that happened more recently and talked about how the bank term funding program was used. A fair number of tweets are talking about how the bank term funding program is being used more and more. To give you a better idea, she said that the total amount of loans from the Fed is down a lot, but the BDFP group of loans is at all-time highs. Last week, banks borrowed a record amount, from the Federal Reserve's newest backup facility. This was because more bets on interest rate cuts made it a better option. Fed data showed that the Bank Term Funding Program, or BTFP, was used to raise a record $131 billion. During the week ending December 20th, the previous high point was $124 billion, which was hit in the week ending December 13. The Federal Reserve launched the Bank Term Funding Program, BTF backed in March 2023 as an emergency lending program to help USI depository institutions get cash quickly. It was made because Signature Bank and Silicon Valley Bank suddenly went out of business. These were the biggest bank fails like this since the 2008 financial crisis. The program was made to help people who make deposits, American businesses and families, for example, by giving eligible institutions more money to make sure banks can meet the needs of all their depositors. To get a loan from the BTFP U.S. banks, savings associations, credit unions, and other qualified depository institutions can put up U.S. Treasury's agency debt, mortgage-backed securities, MBS, and other qualifying assets as collateral. The loans can last up to 1 year. The number of Americans applying for jobless benefits went up a little last week. The most recent sign that the economy was picking up speed again as the year comes to a close. The Labor Department reported a smaller than expected rise in weekly jobless claims on Thursday. This came after new data showed that retail sales unexpectedly went up in November, while single-family home starts and building permits reached their highest levels in 1 to 1.5 years. Because of those stories, economists raised their predictions for growth in the fourth quarter. At the beginning of the quarter, it looked like the economy might break down. There was even better news about inflation. Other data released on Thursday showed that a lot more work was made than was thought in getting it back to the Federal Reserve's 2 target in the third quarter. Christopher Rupke, chief economist at UDB Bonds in New York, said that the economy has a lot of good things going for it. Next year should be even better, because the Federal Reserve will take the brakes off the economy now that inflation is going their way. For the week ending December 16, the number of people who first applied for state jobless benefits went up by 2,000, bringing the total to 205,000. Reuters asked economists and found that they thought there would be 215,000 claims this week. Last week, unadjusted claims dropped 9,239.25 to 239,865, with big drops in California and Georgia more than canceling out a big rise in Ohio. The claims numbers change a lot around this time of the year because of the holidays, but they still show that the job market is pretty healthy, which should keep the economy from going into a recession next year. A poll released by the Conference Board on Wednesday found that the number of people who thought jobs were available in December was the highest it had been in 5 months. In November, the economy added 199,000 jobs, which is less than the yearly average of 240,000 jobs added each month, but more than the 150,000 jobs added in October. Last week, the Federal Reserve kept interest rates the same. In new economic forecasts, policymakers hinted that the historic tightening of monetary policy over the last 2 years is coming to an end and that interest rates will go down in 2024. Since March 2022, the U.S. Central Bank has raised its policy rate by 525 basis points, bringing it to a range of 5.25 to 5.50. That's all for Lyn Alden's Economic Review. How do you feel about these numbers? What do you think will happen next year? Please click the like button, subscribe, and leave a message below. Thank you for watching. Hey, smart people who like money, thanks a lot for being the soul of smart money. Your help has been like air under our wings. There aren't enough words to thank you. Buckle up because we have a deal that only you can get. Ever wish you could be a part of the action? We're giving you a great chance to own a piece of the money that our YouTube station might make in the future. You're being asked to be a part of our story, not just an investment. When you participate, you become more than just an investor. You become a part of the future of smart money. There are no cheesy lines, just a real call to start this trip together. There's more, though. If you decide to accept it, your job is to become a smart advocate. Feel free to share our films on Facebook, Twitter, and LinkedIn, among other places. Your shares make us more visible, which could lead to more views and more money from YouTube. The catch is this: if more people watch our videos, we won't just be making more money. By teaching people useful things about money, we would be making a real difference. Here's the cherry on top. If you invest, you'll be able to join our special Savvy Finance Discord channel. You can talk to smart people about money, share ideas with other investors, and be the first to know about cool new things. To set up your Gigastar account, click on the link below. In the text below, you can also find a link to my giving page. Prepare your Gigastar account and read over the details of the offer. Then let's start this exciting journey together. Thank you to the incredibly smart community for being the key to our success. Your journey is my journey, and we're making waves together. Thank you.